Hey folks, welcome to Thursday the 4th of November 2021. We are now in the wash of the FOMC meeting that we had last night at the earlier time of 6:30 for the presser, and the statement coming out that the Fed is committed now to the bond and mortgage-backed security scaling and tapering back of overall 10 billion dollars worth of reduction in treasuries and 5 billion in MBS mortgage-backed securities. And so that was really, priced in given the indications that we had from the last meeting with so little to go in the rest of the year. Really had to be timed for kind of this November, December period. And the market largely had that, well, really completely had that priced in. So what we got from the speech was upside in equities, downside volatility in the dollar, a little bit of relief to the upside to the euro, but that is completely retraced in terms of the Dixie picture. The Dixie now back on the front foot, trading above where it was pre-meeting, and the euro now in a pretty dire area for further downside from the looks of it. Gold didn't really have a good day on it, given that it was such a risk-off scenario. And so immediately you did have downside on the dollar, but you also had downside on gold. And so the bonds also didn't really like it. Pretty much a full risk-off scenario, or sorry, risk-on scenario yesterday. Over a very bullish FOMC, and a dovish taper is a word that's been used about Christine Lagarde's ECB action so far. Anyway, where we are now with the markets today, we have pretty quiet markets ahead in terms of data releases for today. We have really not much coming out today. To be honest, that's worth looking at. Just let me figure in here and see what we have. Continuing jobless claims at 12:30. The market's opening an hour earlier. We have non-farm productivity actually coming in as well at 12:30. So that will be a big one. That will be interesting. But apart from that, it's pretty clear. And so I think these equities markets are doing well to hold on to these highs as they should. There is further upside expected in my estimation so far. You can see the Nasdaq, which was one of the particularly good trades to be had yesterday, especially for the elite team. I was talking to them live during that. Actually, we were doing a bit of text chat, and a lovely trade to be gotten on the Nasdaq yesterday. We have, of course, 5 and 6 crossover here. Getting on the longs actually at the 16,000 level, and trading up into what is the R1 today. Looking at the kind of chart calculator, the move here was, well, really to the high of yesterday. That was just 0.97% move. And if you're kind of stopping out just around that prior all-time high and just taking it at long at the 16,000s, into the high of day, you're doing about 6.7 to 1. That's 569 ticks there on about 85 ticks of risk, so you're doing about $2,800 per contract traded. And so really nice trade to be had there yesterday. And it's still holding on to the highs. We have a gap up actually here into the APAC session. I think we can maintain these highs, and I don't really see why we should we should crash back down. I think at some junction in time we will need to revisit the 16,000s just to firm up longs from this area and keep going to move higher. So really nice action in the Nasdaq. I don't really see why we should be looking at shorts in these markets. Looking also at the SPOs, similar activity. That prior all-time high giving you a lovely area to get long on the figure at 6 o'clock. Or indeed on the start of the presser, confirmation of the activity for the dovish taper, and up we go. So really nice action there to be had. What do I think for this market? I think we could come down for a retest, but I just don't think the market feels like it now. I think if we do come off a wee bit, I think it'll just reaffirm this 46.27s even, and then move further to the upside. And we do have a bit of a trend that had developed there. Of course, yesterday completely dead. You can see here until the market really came to that FOMC presser, and up we go. So there were some light showings of us going up, but of course the main one was simply this Asia Pac range was absolutely tight, 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 tight. That was the Asia Pac range pretty much to the tick there, and so you can see it just was not taking the short side. I did actually say yesterday twice, I think these markets were clinging on to the Asia Pac low and looking quite precarious for a push down, but we made it, and the market made it to that presser event. And so same on the Dow, really nice trade here from the 35,802s around half five, which just technically made a lot of sense at the time. I actually was looking at shorts on the breakdown at this, and then quickly got out of that and flipped. And you can see, holding well into the 3600s where it is now. So oil, yeah, oil, I think, we picked this level 79.81s yesterday. This is just a very historical level the market has taken. I think we're going to get more downside this week. Well, we have today OPEC, right? And OPEC, are trying to be convinced to put more oil back on the market. Joe Biden and his team, this would be the second formal request for OPEC to put more barrels of oil back on production. They're not going to do that. They have committed to 400,000 barrels a month and no more. And so it's a little bit embarrassing for the US administration now to keep asking. And of course, we have sources this morning coming over on the Squak in my ears saying that, if the US want more production back online, they can do it themselves. They have the capacity to do it themselves. However, none of the private enterprises are interested in reinvesting to do that at this time. So, is the market going to get flooded in the US from the special reserve funds? That's not going to happen. No way. I mean, that's not why they have it to conduct market manipulation. And something else that came to mind this morning is, when the Chinese might do something like this with their currencies, or any other nation would do something like this, what the US is requesting of OPEC, it's termed as market manipulation by the US administration. Whereas when they do it, it's in the name of peace and democracy and for the consumer, right? So anyway, I don't want to get too off script here, but the 79.81s, a nice little knot of an area going back into 2018 here. I think there is an element of kind of luck here, and the 79.81s coming in at the low of the market, or maybe it's just the elite team have took the 79.81s and just said, yeah, right, we're putting in the bottom on oil here. Hardly so, but there is also a gap outstanding above on oil, 82.95s to 83.51s to be aware of. I think the market is going to get dragged back up there for sure. So what do I think for this OPEC meeting today? I think no, there is not going to be any more barrels other than the 400,000 planned that they will put back into production. And I think the market is going to take that extremely well, as in we are going to be we've had the pullback, we should push back above 84.75s. Today, I don't know about that happening today, but we could certainly get back up into this gap area to test on what I think should happen today. So let's see. As always, we just have to wait and see what happens. Gold, really tricky. Really tricky. From a fundamental picture, it's very hard. I mean, getting on the shorts here was quite easy, given that it was a confirmation of the dovish tapering, if you like. But apart from that, I think, as I've said numerous times, I think gold is not an easy trade at the moment, and there are easier ways to make money. However, now we're resistant below 1779s. Looking at this on actually the weekly chart, this is the structure of the market. I think for gold to have any further upside, it's just going to have to let go of what it's trying to do here, is hold on to the compression flag here, this pennant that it's dropping out of. And 1779 spot threes is where it's holding on to right now. But I think under such dovish tapering, I think there is going to be more upside interest in equities, more risk off scenario. And so therefore I don't really see a future for gold at this time. I also see further upside in the dollar. So, I think that's going to be two major fundamental things putting pressure on the price of gold for higher prices. Obviously, caveat always is there, notwithstanding headline risk. Anything can happen in these markets. So, yeah, not too much to cover today. And that is it for me for this pre-US session. Sorry, I've got some light coming onto the camera lens here from the window. Lovely autumn day here in Dublin. All right, have a good session. Any questions or queries, reach out to me in the chat room on Discord, and I'd be more than happy to answer any questions. All right, stay safe out there and have a good day. Cheers.